time for Options Insight, and we want to get you up to speed on the day's options trading. We'll do that with Abigail Doolittle. And Abigail, I believe you're looking at the energy sector VIX.
Indeed, Katie. Not a lot of people know about the OVX, but it is the oil sector energy stock VIX. And what makes it so interesting right now, just moments ago, earlier today, I should say, it was trading at its lowest level since 2020. And yet the energy sector, or the XLE, well, it's still down slightly on the year. But something that's great about being down slightly on the year, well, maybe there's a catch-up trade on the XLE. Alan Nuckman, CEO of Bullseye Option, thanks so much for joining us to talk about this. And you like the energy sector right now. Here, why?
Well, it's been a very orderly recovery for stocks. First you had the NASDAQ, then the S&P, then the Dow, and now the Russell. And crude oil is seeing that asset class come back as well. So it's essentially unchanged in the last year for 2023 anyways. So I think there's risk reward as we see some rotation. And the PE for the XLE ETF is about 8. So it's very inexpensive relative to the rest of the market. And I think the fact that crude oil has popped above 80 is a very positive sign for all those downtrodden stocks.
Well, those downtrodden stocks, Alan, they might be down a little bit this year, but 2 years into this year, that XLE, or the energy sector, the S&P 500 energy sector, up more than 100%. So you could almost consider this year a bit of a pause, but you still like it even though there was that tremendous boomerang off of the 2020 low?
Yeah, because I'm looking for money to move, and I'm a big money flow guy. I keep track of leverage buying. You're seeing a lot of money move into energy companies and the ETF that tracks this. Again, it's a risk-reward play, and I like how things are set up here. You know, we saw the S&P trade in a range for 6 months and then break out and hit its target at 4,600. We could still see a full V recovery in the S&P, and then that would target the markets much higher. But as far as energy goes, the risk rewards here, the best one I like is Oxy, between 55 and 65 for a number of months now. A breakout of this target 75. So I'm looking at the November call options. November 55 calls are trading about 9. They're $7 in the money. And if we get to that simple 75 level, that modest 75, then that option gains about 100%.
So I know that we're not talking technology, but it's hard not to think about it given the fact that, as Katie was mentioning, Amazon and Apple coming up later today after the bell. But you see energy coming up off of its lows, and there's only 3 sectors at this point for the S&P 500 that are lower this year. You see that the breadth that everybody's been wanting all this year, that it is in fact improving?
Yeah, exactly. That's how we started this segment, that it's flowed. We've seen the sector rotation, so to speak, the leaders, and then the others play catch up. And that's what you look for. And we want the market to broaden as it can. And the way for that to happen is with the energy sector, which is always subject to price pop potential.
Right.
Let's remember, at $80, it's still ridiculously cheap for crude oil right now. $217 is where we'd have to get to if we adjusted to 2008 highs for inflation. So there's a lot of upside in that sector.
Great perspective on sectors, oil and Occidental. Alan Nuckman of Bullseye Option, thank you for joining us. And Scarlett, back to you.
Thank you so much, Abigail. We want to take you now to Washington because former